But nothing else matters in business more than a positive net profit. Nothing. I don't know how to say it any more aggressively than that, but if your business is losing money, you got to get into freaking business and you got to figure something out. Because I don't know about people that are watching or listening. I didn't get into business to lose money. We got into business to make a ton of money, to impact people's lives, and to do stuff with that money and not lose it. Welcome to the McGuire Enterprise Podcast with Jeff and James here. You got James here traveling on the road, so don't mind the background or the echo. Hopefully it's not too bad. But we've got Jeff in his home podcast studio. And today we want to talk about profit and loss, reviewing your numbers, knowing the financial health of your business. And we've chatted with some mentors and coaches lately, and Jeff can give us some more detail on this, but knowing your financials, knowing your numbers is got to be the most important thing to business and to your personal life. And a lot of times we separate those, but you know, for myself, I take more care of my business and I'm more focused on my business numbers than I am my personal numbers, but it shouldn't be that way. If we want to be really good at our personal numbers, our personal household and financials, we should look at them detailed closely, doing a better job of that this year, but we digress. So looking and knowing your numbers, that is where everything should start. Because if you know your financial health of your business, then that will allow you to make decisions operationally. And I think so often we want to just get right into the operations. We want to get right into the nitty gritty, right into the hands-on stuff. And we forget that if we don't know which levers turn the financial numbers in the right direction operationally, then we'll just pull a whole bunch of levers at the same time and we won't know which one is actually increasing or decreasing that net profit.
Yep.
So
that's right.
Jeff, tell us a little bit about that example that we were given the other day about just the health of your business and that analogy.
Yeah. So when you're living through your life, you typically are, if you want to live a healthy life, you should conduct periodically checkups on your body, making sure you're healthy, making sure your vitals are on point, making sure your BMI, your body is performing optimally, and you shouldn't ignore those things like throughout your life because you enjoy your life and you want to be around for a while. Yeah.
Maybe for the kids, for the family, right?
And it is odd to me that we may pay, real close attention to our health or certain things in our life, but if you're a business owner or an entrepreneur, and if you ignore your business's health, your financials, and it's not intentional, but we just don't prioritize it, it's going to be really hard for you to set goals and drive your business in the right direction. Because if you don't know how your business is performing from a financial standpoint, then you're just flying blind. And I think a lot of people are flying blind. We did that, for a year and a half. And then we started to kind of snap out of it, ask better questions, and realize if we're working really hard on the business, yet we don't actually have goals and KPIs and financial metrics and things to aim for, then why are we working so hard, right? What are we doing? Because we're not a nonprofit, we're for profit. and we want to make money. So we have to have KPIs and goals from a financial standpoint that makes sense for like our business and our industry, and then tie that right into the operations, tie that into our regional managers, our shift leads. We should all be working together, excuse me, on these goals so we can achieve the financial success that we as a company are aiming for, so that we can give raises, we can grow and expand, we can all financially benefit from. So I know that's kind of a long-winded explanation there, but you wouldn't go throughout your life, you wouldn't go through your life not keeping your body in check, but yet the business side of things, we tend to just kind of wing it, or, it's not important, or we'll casually glance at a P&L. And so there's just a lot to unpack here. And I think if you're a business owner, an entrepreneur, like being diligent and looking at your financials every month has to be a priority.
Yeah, absolutely. Otherwise, just like in your personal health, you'll wind up one day getting a colonoscopy to find out what's going on up there. And you don't want that in your business, because if that's happening in your business, you ain't making money. You're going under. You are big time in the red, and
you're
hurt.
That
ain't going to be good for the business. So no amount of that purple drink is going to be able to help fix the massive disaster. Yes, bleeding, and the massive disaster that your business is in. And thank goodness and thank the good Lord that we kind of snapped out of it, like Jeff said, to get some help, get educated, understand the numbers more, become really attentive to them, and find out which ones are the main levers that can run our business, and then start implementing processes and systems in the operational side to pass down to the team and to the people. So that's a huge point. So you've got to know the numbers.
Yeah. And you got to work with, and this is why we ended up pivoting and end up creating our own bookkeeping company, was because people that we were working with in the past weren't exactly passionate about making sure your balance sheet and your profit and loss were really tied and really accurate. And they weren't really passionate about saying like, hey, this is a major problem in your business here. And so that's why we created our own bookkeeping company, because really at the end of the day, we're passionate about making money. So again, we can do good with that. And we now provide those services for others. And if you're working with someone, a bookkeeper, an accountant, and you're seeing some red flags, and James could definitely cover some red flags, like you need to make some decisions and not wait. There's too much, we'll get to it in a month, or we'll get to it in 2 months. Like urgency needs to be there when it comes to your business, because that's your livelihood, right? So,
well, and I don't know. Maybe some people think, some people, business is just a hobby. I just want to start a hobby. For us, business is the real deal. Like this is our livelihood. This is where we make. This is how we take care of our families. This is how we give. This is how we donate. This is how we invest and grow our business and grow into other industries and businesses like the pickler, pickleball. Like, because we have watched the numbers with crumble so closely, it has allowed us to move into other industries, get into real estate, right, and other things. And so if you're being mediocre, which I would rather be poor or suck than be mediocre, because that just literally means that there's so much more energy that you have to give and you're not doing it. But I would rather that than be mediocre. But if you're being mediocre, get off the couch, get into your business, understand your financials, give us a call, DM us, get some help. We can point you in the right direction. If it's taxes you're concerned about, we've got a guy that we work with that we're kind of partnering with down in Texas. David Perez, great guy, great team.
Mm-hmm.
Shout out to them. They have killed it for us with lowering our taxes legally, of course. There's some
Yeah.
gray there, but you've got to find the right people. You have to find the right people. And in 2023, Jeff and I made it a point to find the right person, the right people for taxes. Because if you don't keep money, right, it's not about how much money you make, it's not about your gross profit, it's about your net. What do you keep? And that includes
Yep.
from Uncle Sam. What do you keep from Uncle Sam? Because
Oh,
he's
uncle.
your absolute biggest liability when you start making some serious money. So super important that you understand the numbers. And that's what we wanted to talk about today. We wanted to review some of our February profit and loss numbers, go over some of our metrics, our goals. Jeff and I are super transparent. We have nothing to hide. We we love the numbers, and we're blessed beyond belief that we've been able to get into a business, crumble, and an industry that has been so good. We've got some people that say that have told us in the past, you shouldn't share the numbers. You should keep that stuff private. You should keep this. Well, to be honest, if we all collaborate together and we grow together, then we
Yeah.
shouldn't be afraid of a scarcity mindset. Somebody that tells you shouldn't share and you shouldn't coach and you shouldn't help, they're just scared. They have a scarcity mindset that it's going to turn off. For us, we have an abundance mindset. We want to continue to build relationships. And we believe it's just going to come back around again, and we can help somebody else out. So, Jeff, I don't know where you want to start here, but I can share my screen. And listen, if you're listening to the podcast, awesome, love that, but you're only going to get a piece of this episode. You really need to go to YouTube, check us out on YouTube, because that's where we're going to have the screen share. You're actually going to get to see the numbers live on the desktop here. And so, you're missing out on some of it. I'd highly recommend you dive back over to YouTube. We'll probably have some Instagram cuts here. All right, Jeff, I don't know where you want to start here, but we've got January. We can just dive right into February if you want, and kind of maybe explain some of these specific sheets here.
Yeah. So one thing we do is we're tracking our P&L and the most important things on a month-to-month basis, and we're doing it on an Excel workbook that we're updating weekly or monthly. That's live. There's obviously hundreds of ways to track your business's performance. We obviously get our P&Ls through a PDF through our company, led by Magda. We typically get that the first week of the month. Again, that's another huge benefit that we have, and we can, if you work with us, we can obviously work with you on getting your numbers early. But that's one of the biggest problems we found is P&Ls and things aren't kicked out till the third week of the month, which really is a lagging indicator. It's a problem because you don't know the health of your business until the third week of the new month. And so it's really hard to ever catch up and make changes. But yeah, so this is typically what we do is we'll have each store have its own profit and loss kind of summary because there's a lot to look at. So we just rip out the most important things in the P&L that have the biggest drivers that we focus on, and we work with our regionals, our managers, and our shift leads together on. So that's what you're looking at here. We do it individually by store, and then we just do a month over month and compare all the stores right next to each other, which is what you're seeing here. We've got all 7 stores, and you can kind of see how the store is doing. We typically capture the revenue and then refunds, discounts, and then we just work into the COGS, which is cost of goods. For us being in the food industry, it's going to be food, it's going to be labor, it's going to be paper. Those are really the top 3 COGS, the cost of goods that affect our revenue. So we capture those. And we break down our labor a little bit more so you can actually kind of see what's happening. You have different departments in your payroll. We have really, it's bakers, shift leads, and managers. So we break it up We have a total goal of all in labor, which is 22% or 20%. And then we break down each sub labor category, bakers, what they should be, managers.
Yeah. Now, just
and
a
shift
quick,
leads are dumped into the managers. So
just a quick caveat. You'll see under Methuen. Now, every store is different, so get into your numbers and understand what metrics you want to do. These are the metrics that we do. They're on the left-hand side. You can see there in the column. But in Methuen, we have really high minimum wage. It's $15 an hour in our Methuen, Massachusetts store. So our labor metric for that store is actually 25%. We have adjusted
correct.
that.
Yeah.
So it's important that you adjust to realistic goals. Don't make something, crazy and ridiculous. To get Methuen down to 20 to 22% on the month would be really, really tough.
Yeah, be tight.
So we're just being realistic with these metrics and these goals.
And the goals that you and your controller, your executive team need to be focusing on is what is column A. So all the way to the left, this is what we've decided is a healthy goal per category. So COGS, what we want it to be, food, paper, bakers, managers, all in labor, gross profit, expenses, and then net profit. This is what we have decided over months and months and months, and really probably a year of looking at the performance of our business, looking at the data.
Yep.
We believe it's a stretch, but we don't believe it's unattainable. And we believe if we strive for these metrics, these goals, these percentages, it will land the business in a healthy spot, but it won't burden and really over demand the team, which ultimately, hurts the customer, which hurts the revenue. So, but I highly, highly challenge you guys, work with your team. If it's just you, then work with you and your controller, your bookkeeper on goals. What's the revenue I'm shooting for? What's my COGS percentage? What's my gross profit percentage I'm going for? What's my expenses goals I'm going for? And then what's my net profit? Again, like why are you in business if you don't have these things outlined? It just doesn't make sense. And it didn't make sense for us. And that's why we were floundering for a while. But it's time to get serious. And I'll tell you this, last thing, this was not natural for James and I to do in the beginning.
No.
But really good business owners, really good entrepreneurs, they adapt and they learn. And they realize what I'm doing is really dumb and I need to stop doing that and I need to learn. And so we learned this and now it's become a habit. We made it important. So you there's no excuse of like, well, that's not my thing. I'm not into the numbers. Well,
then maybe business isn't your thing.
Right. Then maybe business isn't your thing.
Or making money isn't your thing.
You don't need to be a master at it, but you need to be aware of it and you need to have a team that's putting this stuff together and you're meeting regularly about these things.
Yep.
Unless you just don't care about making money, and that's cool, and then that's your MO. But
that's again we go back to mediocrity. You might as well just be poor. Oh my gosh. So let's just dive into some of these and we can slide over to January too. But February was a really good month company-wide, Crumble corporate-wide, a lot of great marketing, a lot of great advertising, a lot of great limited time offer cookies. I call LTO cookies that came out, Cinnamon Square, Tres Leches. And then we had Valentine's, and Valentine's week / day is the biggest day of the year for Crumble. I know some stores, actually some of our stores even did more sales on that one day than we did on our grand opening day, which is just craziness. So just a really good year, month this year for February. Last year, February was good, but this year has definitely seen an uptick, which is fantastic. So just breaking down some of these stores, you can just see the gray line here is our COGS. We want to be at 45%, and you can see some of the stores they nailed that. So you've got Salem's just on track with everything, 45. North was 45. Concord's just a touch high, 45. Methuen is a touch high at 46. South killed it by being under. They were at 38. Williston killed it at 37. And then Maine, our store, Rock Row, there at 40, killed it. Now, one thing that's interesting to notice is your stores, and whether you're in Crumble or other fast food quick service restaurant, depending on who you have as the general manager or the leader in that store, could determine a little bit different with your numbers. Now, it shouldn't. It shouldn't too much, because we should have processes and systems in place, but it still will. And so you can see, for example, this North Nashua store is a really low volume store, only did $73,000 in revenue, compared to South Nashua did basically $20,000 more. But the manager running that store, Amber, shout out to her, she killed it in February. All of our managers did, actually, but Amber runs North and South, and you can see it's much harder to hit lower numbers in a low volume store than it is a higher volume store. Again, Williston and Vermont and Maine, you can see their total revenue there at the top line. Those stores are higher, a little bit higher volume, and it's a little bit easier to get those stores down, because it doesn't necessarily, when you go up in volume or in revenue, it doesn't necessarily take a ton of extra labor. I mean, you can look at the labor numbers there. You got 17% all in labor in Vermont, 19.5% in Rock Row, and that's only 2.5%, really 2-ish%, 1.5% there between Vermont and Maine, but it was a $20,000 in total revenue difference. So your manager, and we're coaching, consulting with a group right now that has a bunch of stores that works with us, with our bookkeeping company and consulting. And we've been working with them for 3 or 4 months now, and they're starting to see some serious changes, but we talk a lot to them about operations, about management. Who's doing this? Why are they doing it that way? Have you thought about changing this? And so you can set these goals and metrics, and that's number one of the most important things. They have to have something to hit. What we focus on grows. If I want to lower my tax rate, like we did last year in 2023, then we're going to focus on finding the right tax strategist and the right person to do that for us. If I want to go lose weight and I'm not thinking and focused on losing weight, then I'm never going to lose weight.
Right.
If I'm focused on if I have at least a target or a goal, then that is the target that I need to shoot for. And if I'm talking about it with my management team every single week, multiple times a week, it's just eventually going to become in their subconscious mind that they need to hit 20% on the food cost, 22% on the labor, whatever your goal is. It will subconsciously seep into their brain, and they will start doing it. Again, You've got to coach them, and you've got to have those goals. So,
but yeah, I mean, to James's point here, guys, all of the goals here, like if you're looking at food, right? 20%, paper 3%, and then your labor 20%. These are all very operational type categories. So it's like you then have to get with your operations team, your managers, and build in mechanisms, build in standard operating procedures, build in expectations that this is what we're trying to do. So that way everyone's rallied around, okay, we cannot spend more than 20% of our revenue to food. And that's what we mean by that.
To your point, Jeff, your COGS for us, we want it to be no more than 45% of our total revenue. So think about this. You have a manager, 22, 25, 30-year-old, 35-year-old, that is in control of 45% of our total revenue. every single month.
It's a big deal.
If they screw that up, that's 45%. Now that's 55%. Now it's 60% down the drain. And so,
yeah, which is tens of thousands of dollars.
And
And
over the year,
but
it's
we as a
hundreds and
team,
hundreds.
but it's our job as owners or the executive team or whatever. Like, it's our job to drive the goals and then
Correct.
drive the resources, drive the expectations with them, and then help them through this.
Correct.
It's not just, hey, here's the goal, good luck, figure it out.
Right.
You can do that, but it's going to be messy. So it's a very collaborative, weekly, monthly conversation, meeting, and then physically helping each other achieve these goals. It's not just kind of like we set it, forget it, and then let's see what it looks like,
Right.
in 30 to 45 days. It's a very active process to hit these goals because things change so frequently, at least in the food industry. Now with pickleball, there's going to be a lot more static.
Yeah.
It's going to be a lot more static when it comes to our labor and then our expenses. Once we kind of have everything set up, those things aren't going to change a ton. And then it's going to be our job to really just crush the revenue portion.
Mm-hmm. Mm-hmm. Yeah, 100%. So you've got to have the goals. You've got to have these numbers. Remember, your team, your management team, if you will, they're in control of this big number here, the COGS, cost of goods sold. That's 45% of your revenue, right? So if you can have 45% of revenue, then your goal should be 55% gross profit. And that's our goal, is 55% gross profit. And you can see we nailed that in most of these stores. Again, South Nashua was 61% gross. Williston was 62. Rock Row was 59. Again, this was a really good month. It's not like this every single month. This was a really good month. Then you get down to your fixed costs, right? You go down to expenses. That stuff's
More
fixed.
static,
There's not
yeah.
much you can do with that. And then we have a little category of like red flag expenses. Why was there $260 here? Why was there so much travel? Why was there a huge tax bill or something? We want to flag things that are out of the normal. Was there a major repair? Was there something like that? And then we go down to our net. And listen, I don't care what anyone says. I will take this to the grave. There is nothing when it comes to business. There is nothing more important than your net profit. I don't care if your labor is 5%, right? If your net profit is not decent, is not hitting a goal, if you're not making money, then I got to be honest, I don't even want to hear from you. Like, I don't want to take advice from someone who is not hitting. This might be harsh. Maybe I'm getting a little aggressive here, but
A little bit.
Yep. I don't want to take advice or listen to someone who doesn't have good numbers. And nobody's perfect. We are definitely not perfect. We'll show you January. January is a little bit less than this. But if you're not making money in your business and have systems and processes in place to do that, and nobody's perfect. You could have a manager jack something up, or you could have, COVID and something could happen. But nothing else matters in business more than a positive net profit. Nothing. So I don't know what to say. I don't know how to say it any more aggressively than that. But if your business is losing money, you got to get in the freaking business and you got to figure something out. Because I don't know about people that are watching or listening. I didn't get into business to lose money. We got into business to make a ton of money, to impact people's lives, and to do stuff with that money and not lose it. So, and we've been told by plenty of landlords and plenty of people that Jeff and I will fail. You shouldn't start during COVID. This business you're going to be out of business in 2 years. Like, we've had it all said to us. So this stuff drives deep for us. There's a lot more to it than just money. But if you're not making money, man, you got to do something. You got to do something quick. So then we've got our net here at the bottom. Go ahead.
No, it's just having urgency. So as you see in the bottom there, you've got the percentages, and in your lower volume stores, because like James said, your expenses tend to be a little bit more fixed. That's why it's so important to really hammer down on your COGS, because your COGS you can kind of crank down a bit, food, paper, labor, but expenses like electricity, there's only so much you can do there, right? Um,
Yeah.
your rent, if you negotiated bad rent, which I thought we did a decent job with our locations, but there's a few of our locations that the rent is coming in a little bit high. Now,
Mm-hmm.
rent changes every year based on what you negotiated during your kind of site selection process. But yeah, your
And
rent, you're stuck with whatever you pay every month for your
yeah,
rent. So
north is actually kind of high. I didn't know it was that
north
high.
is high,
Yeah,
and actually
south and
Methuen
Methuen are high too.
south is creeping a little bit. I mean,
And then
Matthews,
Maine.
obviously, Concord and
Yeah.
Salem were decent. Wilson's great, but that's why it's extremely important to really nail that gross profit of 55%, because for us, we have seen kind of expenses between 30 and 35%, which is a little bit high in my opinion, but it's really hard to get it sub 35%. Like you can see here in Salem, it's 37, then 38,
Yeah, 31,
34.
34. Yeah,
We
37.
nailed 27% there.
In
Which
south,
store is
yeah.
that? That's
South.
south, so that's phenomenal.
Yeah,
And
Williston.
then
And again, as
Williston
you start
27.
going up in revenue, right, your percentages will change. But when your stores have lower revenue, it's going to be really hard to keep that stuff in line.
Yeah. So then it goes into like, hey, how do we drive new business, new revenue, new sales? But we're really, really thrilled with how February came out. It was a busy month, short month, but we as a company, it's a big success with
For
hitting
sure.
our goals, hitting our metrics.
What was the
And it's because
company-wide net? 22, 23?
yeah, so it was 23% in February, which being in the food industry, if anyone is, that's pretty good. Typically, I think the food industry is 5 to 10%, and so we're above that. Again, this doesn't happen every month, but
No.
we've been practicing and training this kind of. We've been practicing and training our teams and preparing since last July.
Yeah.
So
Yeah.
we've been running
Really cranked
hard at
it down.
really hard. Yeah, working with our teams, setting these goals. Every week we meet as a company and talk about the performance, the
Yeah.
culture, what's coming up, but we're always meeting and this is always top of mind. And after 6 months of us swinging the bat at these goals, like we as a company are getting a lot closer to that. So it doesn't happen like that. You're
No.
talking about, this is a very complicated business is complicated and there's a lot of moving parts.
Yep.
There's a lot of money moving around. We've got over 110, I think, employees at this moment. So there's a lot going on. So that's why it's so important to start. And over a few months, you will start to see a really good trajectory, really positive trajectory if you are getting things dialed in. If you're creating the buy-in, that's huge. And again, that happens when you have a relationship with your team, your regionals, your managers, your shift leads, because there's a direct correlation between being emotionally connected with your team and the performance that then happens. So
Right.
this stuff
And
doesn't happen over time, but
it does become a little bit more complicated, Jeff, and you probably agree with this, as you scale, as you get more locations, because you as the owner or as the driving force of the company, you have to step back a little bit and actually work on the company, work on the processes and systems. Jeff and I had to do a lot of that. We had to rewind a little bit at the beginning of this year and work on that. to
We're
make
still
sure those
doing it. Yeah.
processes and systems were in place. But over time, you will have to step back a little bit. And one thing I would say about that is you better have the right person to step in for you. And I know that we do. Thankfully, Jason, St. Louis is just freaking incredible.
Killing
He's
it.
stepped up big time, just killing it. And we just promoted Ashley Ross as well to help him as an area manager, regional manager. And together, those two are they're just taking the bull by the horns, and really implementing what we've wanted them to do and driving the team. And now that allows Jeff and I to really focus more on the strategic stuff, new build outs, new concepts. But it all goes back to the numbers. We wouldn't be able to afford Ashley or Jason or these other people that we've brought on, these back office staff, recruiting talent, marketing director. We wouldn't be able to afford these people if we didn't have financial goals and start achieving them. Right. And so that's something to think about, as you start, your journey, or you're in your journey now and you're like, all right, I need to get this thing moving. Right. So I wanted to swing over, and just in full transparency, Jeff and I are super transparent. We don't ever want to be accused of like, oh, you're only going to show us the good stuff. Well, January, just looking at January, you got a lot more red here than you do green. So January, the beginning of the year, when everybody's trying to lose weight, get all skinny and stuff, sales are down. You can see total revenues down in all the stores. Thankfully, Rock Row and Wilson still did well with their revenue. But same goals, right? Nothing's really changed here, but you've got your COGS a little bit different. So North struggled a little bit, 52% in their COGS that month, 56 in Concord, 47 in Methuen. South was a little bit high. Williston, Maine, we're kind of like right on. You could see, though, where it came from. It came from food, came from labor, food, labor, all in labor, right? So you can see exactly where this stuff came from. We know exactly what levers that we need to fix and we need to pull to make that change. And you can see that change was made. Like, for example, South was so high on their food in January. And I think if we look over here, their food was 12% in February. And I think that was part of a big order was made at the middle to end of January. So it went on that P&L instead of February's. But we made it up in February, right? And so for those of you who are in the food industry, you understand that, right? Your bills are 15 net or net 15. And so you're not paying them right away. And depending on what accounting system you're on, whether it's cash or accrual, or ours is modified. But we can tell exactly where we messed up or where we went wrong.
Yeah. And that's huge, because it's good to be able to see exactly where we missed it so we can coach on it, train it, put systems in place, reward, right, when we nail it. And that's so crucial, is capturing the mistakes, capturing the misses, and seeing it month over month. It gives you the story, right? And what kind of story are you trying to write? We're trying to write a story of success for everybody. And so that's why that's why we're doing this month over month, and we review it with our teams.
Yeah.
To be
So January, I think we did what, 12% company wide? It was 12, 11 or 12.
Yeah, just over 12%.
But you could see, 2%, a net positive 2%. That's not, to be honest, that's not good enough. Like $1,400, that's not going to run the bills. That's not going to pay my family bills. Jeff and I splitting that, or whatever, however your equity breaks down, that's not going to cut it. So we've got to do better. And thankfully we picked it up and we did better in February. But you can see these small percentages, like that's not going to build a Pickler location or another Crumble location if we're requiring this cash to fund other businesses. The other thing I want to say that we track, and this is really great, is some store metrics, some stuff that's not financial, but it's more operational.
It's tied to the finances.
Yeah. And this helps figure out, okay, what are we missing? why is labor this? Why are we not selling as many cookies? Like, you could look at this sold out category. Why are we, 80% sold out in Rock Row over January? That's something that we've really been working on. Why are we sold out in February so often in certain of these places? That's something we've definitely worked on and fixed in March, as we work through higher volume. Now, one aspect I'll say that's not anyone's fault is with Crumble, especially because our menu rotates, we get really big spikes in volume. People might really love a certain cookie. And so it's like, okay, when we're doing our game plan, did we plan for that? Did we prepare for that? Well, sometimes it's really hard to plan, when the weekend before you do 10,000 cookies and the next weekend you do 20,000. It's like, it's hard to plan an extra 10,000, right? I'm just using those numbers as
quick.
Yeah, as simple math, but week over week, if you're going up and down. So that's one factor, but we track all these numbers. We talk with our team, our managers about them, our average tickets, our reviews. Like, are we getting reviews? Are we getting bad reviews? If we're getting bad reviews, we got to get on that. We got to find out, because that's revenue. What's the lifetime revenue of a customer, of Crumble, a dedicated customer? It's got to be a couple $1,000s, over 2-3 years. And so we can't lose that revenue because of a bad experience or bad review. We've got to get on that right away. So this is an extra thing that Jeff really kind of put into place. Crumble has this for us to review and see, but seeing it on this little dashboard that we have here, where we can see the financials and we can see the metrics, is really helpful to be able to determine some of the stuff. Now, we've got other spreadsheets that we look at too. And I would just recommend, figure out what works for you. Work with your controller, figure out what works with your team. Give them something super simple. We use a different dashboard that Jason St. Louis actually created. Incredible. Again, another shout out, Jason. Another shout out to you, man.
Jason, killing it.
We got to get him back on the show. But it's super helpful. That helps the team track sales from last year, sales from this year, trends, and so on. But again, it's all about knowing the numbers. Knowing the numbers allows us to make good plans for the future.
Yeah. And in real time, that's what we're trying to do. Like, Jason's workbook that he put together is really tracking things day to day. So you're really, really dialed in on how the day's performing. Where something like this, we're looking at it, once, twice a month, putting it together and looking at the larger story. But the real important piece is paying attention to the day. And when you pay attention to the day, based on our larger goals, right? The monthly goals, knowing that in hand, and then now dialing in on how you're performing every day, usually you're going to land at a decent performance at the end of the month, because you're so dialed in every day on the key metrics and the key cog goals, right? Labor, food, paper, that it kind of guarantees you a pretty successful story at the end of the month. Now, if revenue comes crashing down, that's a different story, because now you got to quickly pivot all your cogs. But on a traditional month where things are pretty static, if you're dialed in on your daily performance, then you'll usually be pretty close to having a successful month, at the end of the month.
Yeah. Now, we're recording this in March, and March is a 3-pay period month. So if you're doing your books, cash accrual modified, I forget the term there, but we're doing ours modified. And if you do it that way, you will have 2 3-pay period months. March is one of those, and I think September is another one later this year. But that's going to be interesting, because that's going to put another $10,000 or so, I think, on our payroll that we wouldn't normally
typically have. Yeah.
So that's something that you've got to kind of plan for. Last year when we had one, we tried to pay some bills and pay some expenses ahead of time to see if that would impact or affect it. Turns out it didn't work as well as we thought it would.
Yeah.
So we're not going to do that this year. But what we are going to do is we're going to just continue to talk to our managers and our team and say, we got to run it lean. We got to run it tight. We got to make sure we don't have waste. We got to make sure we have the right amount of cookies. We got to try to get more revenue. And with Easter coming up here soon, just having St. Patrick's Day was pretty good weekend. And just our team really, I feel like in the last 3 to 5 months, like really growing, getting into their roles, getting more aggressive with training, getting more efficient. I think this is going to be a really cool year to see how well we do. So, yeah.
And speaking of that, we should do a podcast with JB because I think what he's put together and massaged over the past couple months from like a marketing standpoint, I think we should talk about it because a lot of what we're talking about here is it's not necessarily offense stuff like driving revenue, creating new revenue streams, getting people to spend more. What we're talking about is, hey, here's your goals. Here's your metrics. And we haven't really talked a ton about marketing and trying to increase your sales every month. And I think we should definitely get JB on here. We could share the screen and kind of go over our marketing calendar by quarter. Yeah. But what we do is we are now planning out by quarter. So typically three months at a time, our marketing strategy or our sales strategy. How do we get more people in the store from a marketing standpoint, mostly digital, and then events. So like grassroots events, being local, being in the community, driving people to the store.
Yep.
And then we're doing a few other things like special promos and special working with our third-party delivery vendors, trying to drive some special initiatives through that around key holidays. But we're tracking the key holidays, the key things our franchisors doing, and we're getting way ahead of it to plan so we can complement what the franchisor is doing. We can complement these big holidays.
Yep.
We can try to strategically place our locations into events and things that are popular, in the community to bring brand awareness.
Yep.
And this is something we did not do for a while, but we realize the importance of it now. And every business owner and entrepreneur should have some sort of marketing and sales kind of initiatives and strategy to drive more revenue, right?
And I would say too, in the beginning, we were a little fearful of, well, should we spend money on this? Should we spend money on marketing? Should we spend money on grassroots events, or should we just hold on to that because it doesn't seem like it's working? Blah blah blah. Excuse me. So I would say it is working. We are seeing it work. We've done some really cool things like most valuable customer. We did what do you guys call that with Anthony?
We're just doing we're doing super fan content right now where we're highlighting raving fans of Crumble and talking to them and doing a 30-second reel.
Yeah, like a highlight.
Just showcasing them. Like as a brand, we want to highlight our customers. Like it's beyond the money aspect there.
Yeah.
Because we want to show appreciation. And so we're doing these super fan. And again, we could talk more about this on maybe the podcast we do with JB and which we should definitely do. But we're sprinkling in highlights of our customers throughout.
And it's getting some serious traction too. Like he's getting a lot of reach with a lot of people enjoying it, commenting, just saying that they love Crumble and so on. And so it's not necessarily all the time about call to action, come by, come by, come by. Sometimes it's just like, hey, we're a decent brand. We love being in the area and we love our customers. So let's, come hang out. But make sure you buy cookies.
Buy a 4-pack or a 6-pack.
Yeah.
So,
yeah.
But yeah, we should schedule something for him and we can
just
kind of walk through what we're doing.
Absolutely. Well, any final just kind of final thoughts on the numbers? I mean, the final thing that I would say is if you've been thinking about your numbers, you've been thinking about your profit and loss, or if you're unhappy, if you're just unhappy with your profit and loss and what you're making, come talk to us. Reach out, send us
Yeah.
an email, and we'd be happy to just give you some advice, give you some
Let's
free
talk.
advice, give you some free consulting or you know, just chat with you, dissect your business a little bit, ask some questions. Maybe we think of something that you haven't been doing, or if you're unhappy with maybe your bookkeeper and you're not loving the strategy that you're getting, again, reach out to us. But the last thing I would say is, if you're not happy with that stuff or with your numbers at minimum, you've got to understand them. And understanding your numbers and setting goals is the first step, right? And so if you do talk with Jeff and I, the first thing we're going to say is, well, what's your goal? What's your target? If you don't have a target, then you don't know what you're shooting for. So,
Yeah, and this stuff takes time, and we're still learning every week, every month. So the fear of like, oh, I don't want to, someone to know I don't know what I'm talking about, or it's fine. I mean, we're there. So the people who win are the people who are open to just being transparent and saying, you know what? I suck in this specific area. Who do I need to talk to and get to know and ask questions to figure it out? Those are the people who win. The people who don't win are the egomaniacs who think they know it all and don't ask questions and talk all the time, yet their performance and results are subpar, right? Those people don't
that's
win.
why I say, show me the numbers, baby. If you want
Show
to
the
talk,
numbers.
show me the numbers, and then
So
I'll
don't
give
be
you a few
embarrassed.
minutes.
Don't worry about it if you don't know the numbers, but you need a company, you need someone to be packaging and putting your financials together so they're really accurate. So then you can make accurate decisions on your business. That's the other problem. If you don't believe you're getting accuracy in your financials, your profit and loss, your balance sheet, things take a long, long time. It's pulling teeth to get information from your bookkeeper or accountant. That's obviously a red flag and a problem. And how many months do you want to wait? Because every month you wait, you could be losing thousands and thousands of dollars that are literally just being dumped, right? Burned up.
Mm-hmm.
And if you can save that by making a change, then do it. Like, just don't
Yeah.
wait. There's a
Yeah.
lot of procrastination. And then we just challenge you. We were so thankful we made the pivot away from our prior bookkeeper and accountant and then created our own bookkeeping business. We're loving it. And now we're helping other people. And now they're getting education. They're getting success. It's not a stress and a burden, to talk with your bookkeeper or your
Right.
accountant. It's actually enjoyable, and you're ripping off the Band-Aid of problems, which is good. Like you want to find the problems and then start providing a solution to those problems.
Yep.
So I just challenge you, if you're having a lot of problems and challenges with your bookkeeper and accountant, start asking questions, start pushing back, reach out to us. We're happy to jump on a call. You can email us, DM us, text us, call us. We're here to help and share, because we just have a genuine passion for entrepreneurs and business owners to thrive and to do a good job. And you got to know your numbers to do a good job. So
Yeah, and I don't know. I would be as bold to say that I don't know anybody that's willing to share their current profit and loss statements, and actually dissect them and go over them. And so if that doesn't tell you that, or show to you that Jeff and I are very genuine about helping other people and transparent about what God has given us, because we
right.
didn't do this ourselves, right? This was all, we've been blessed by God that's given us an incredible business, an incredible team. And so we want to share, we want to help. our mistakes and all that stuff with you guys. So listen, share this with somebody. And if you're just listening on the audio, get on YouTube, get on Instagram, check it out. We're going to have some clips on there, but we'll get this up here very quickly. So you all be able to check it out. Share this with somebody, share this with the business owner who maybe needs to look at their numbers, maybe needs some help. And we will catch you guys on the next episode. Appreciate you.
See you guys.